I like the idea of having a little more than a nickel a week to work with, and I went into business very early.
How Warren Buffett turned $100 into $100 billion lessons for you. Warren Buffett, often referred to as the Oracle of Omaha, is widely regarded as one of the most successful investors in history. Over the years, he turned a modest $100 into a fortune exceeding $100 billion, demonstrating the power of smart investing and long-term strategy. But how did he achieve such remarkable success? In today's video, we're going to dive deep into the key lessons from Buffett's incredible journey. You'll learn how he identifies opportunities, manages risk, and stays patient through market fluctuations. These timeless strategies can be applied to your own investment approach, whether you're just starting or looking to enhance your portfolio. With the right mindset and discipline, you can build wealth over time, just like Buffett did. 1. The power of compounding. One of Buffett's biggest secrets is understanding the power of compound interest. While many investors focus on quick returns, Buffett has always focused on the long-term growth of his investments.
I made a penny a paper, but in terms of compounding, that penny's turned into something else. Compound interest is the eighth wonder of the world or something like that. And it goes back to that story you probably learned when you were in grade school where
He's known for buying businesses that generate consistent profits over time, allowing his wealth to grow exponentially through compounding. Buffett's strategy involves reinvesting the profits generated from his investments, which in turn creates more profits, and the cycle continues. This approach is at the core of his wealth-building success. Start investing early and let your money compound. The earlier you begin, the more powerful compounding will work for you in the long run. 2. Value investing. Buffett is a staunch believer in value investing. He doesn't invest in just any stock. He looks for undervalued companies with strong fundamentals. By focusing on companies that are priced lower than their intrinsic value, Buffett has been able to acquire assets at a bargain and watch them grow in value over time.
you can't really fail at it unless you buy the wrong stock or just get excited at the wrong time.
This approach has allowed him to build a diversified portfolio of companies that continue to provide steady returns, even during market downturns. Focus on the intrinsic value of a business. Don't chase trends or hype. Invest in companies that have solid fundamentals and long-term potential. 3. Patience is key. Buffett's wealth didn't come overnight, and it didn't come from quick, high-risk moves. One of his most famous quotes is, "The stock market is a device for transferring money from the impatient to the patient." Buffett is known for holding his investments for decades,
Every dollar then is, worth making $10 or $20 later on.
allowing his companies to grow and compound over time. While others might sell at the first sign of a market dip, Buffett remains calm, sticking to his long-term strategy. Don't be in a hurry to make quick profits. Invest with a long-term mindset and be patient for the compounding effect to take place. 4. Invest in what you understand. Warren Buffett has always said, never invest in a business you cannot understand. This is why he avoids complex or speculative investments, like tech stocks or cryptocurrency. Instead, he focuses on businesses he can easily understand.
Investments as opposed to a tendency to focus on what's happening today or even this minute as you go through. And to help me in doing that, I'd like to go back through a little.
Like insurance, consumer products, and energy. By sticking to what he knows, Buffett has been able to make more informed decisions and reduce the risk of his investments. Focus on industries or businesses that you understand. The better you understand the business, the better equipped you'll be to make smart investment decisions. 5. Circle of competence. Buffett has often spoken about the importance of having a circle of competence. This means knowing the limits of your knowledge and only investing in areas where you have expertise or a deep understanding. By recognizing his strengths and weaknesses, Buffett avoids unnecessary risks and focuses on areas where he can make the most informed decisions. Lesson to learn: stick to your circle of competence. Invest in areas you understand well and avoid venturing into markets where you lack knowledge. 6. Buy and hold strategy. One of the defining features of Buffett's strategy is his buy and hold approach. Once Buffett invests in a company, he typically holds onto it for years, if not decades. This strategy allows him to benefit from the long-term growth of the business without worrying about short-term market fluctuations. By holding on to strong businesses, Buffett has created a portfolio that generates significant returns year after year. Don't get caught up in the noise of the stock market. Look for quality companies and hold on to them for the long term. 7. Risk management. Warren Buffett is known for his cautious approach to risk. He believes that risk comes from not knowing what you're doing. By thoroughly researching every investment and understanding the businesses he invests in, Buffett minimizes the risks associated with his decisions. He's also very clear about the concept of margin of safety, investing in companies at prices significantly below their intrinsic value, which provides a cushion against potential losses. Invest only when you have a clear understanding of the risks involved. Always have a margin of safety and avoid taking unnecessary risks. 8. Reinvesting profits. Buffett's strategy isn't just about making money. It's about reinvesting those profits back into more opportunities. Instead of taking profits out of his companies, he reinvests them into more acquisitions or stock purchases. This snowball effect allows his wealth to grow exponentially over time. This strategy of reinvesting profits has been one of the key drivers of Buffett's long-term success. Reinvest your profits to compound your wealth over time. Don't take your earnings out too soon. Let them work for you. 9. Keep it simple. Despite managing billions of dollars, Buffett's approach to investing is refreshingly simple. He doesn't try to predict market trends or engage in speculative bets. Instead, he focuses on buying great companies at a fair price and letting time do the work. This simplicity is what has allowed him to stay successful for decades, avoiding the complicated strategies that often trip up other investors. Lesson to learn: keep your investment strategy simple. Focus on buying good businesses, be patient, and let the long-term growth take care of the rest. 10. Giving back. Warren Buffett's commitment to philanthropy goes beyond his reputation as a shrewd investor. In 2006, he made one of the most remarkable pledges in history, vowing to give away 99% of his wealth to charitable causes during his lifetime or upon his death. His dedication to giving back reflects his belief that wealth should not only serve personal interests, but also contribute to the greater good. This pledge is primarily directed towards improving global health, education, and poverty alleviation, with a significant portion going to the Bill and Melinda Gates Foundation, among other charitable organizations. Buffett's philanthropic efforts challenge the common notion of wealth as something to be hoarded, instead promoting the idea that it should be used to make a meaningful difference in the lives of others. By leading through example, Buffett hopes to inspire other billionaires to follow suit and address society's most pressing issues. About the bigger picture when building wealth. The goal isn't just to make money for yourself, but also to make a difference in the world. Warren Buffett's incredible journey from a young boy with a $100 investment.
So I say, can I function without knowing that? It's the same way as predicting what business is going to do or the stock market is going to do. I can't do any of those things. But that doesn't mean that I can't do well investing over time.
To a $100 billion fortune offers invaluable lessons for anyone looking to build long-term wealth. By focusing on the principles of patience, value investing, risk management, and a long-term vision, you can apply these strategies to your own financial journey. Remember, it's not about getting rich quickly. It's about making smart, informed decisions and sticking to them over time. Start small, be patient, and allow your investments to grow through the power of compounding. If you're ready to start your own journey toward financial freedom, subscribe to our channel for more tips on how to make smart investments, build wealth, and learn from the best. Let us know in the comments which lesson from Warren Buffett's strategy you plan to apply to your own life.